Hello everyone, I'm Eric from Summit Metals, and we have had a tumultuous week, and we're going to dig into exactly what's happening, what we should be doing. Stay tuned, because toward the end I'm going to share some private models that are quite revealing, and I think you're going to enjoy this presentation today. So let's start with the charts, and let's start with gold. As you can see, we had this huge drop that we're all aware of where it came way down. Now look what happened. It got right around this 20-day moving average, and from there it had a tough time going lower. Now there were some trades that printed way down here around 4,400, but then the candle closed way back up. And now we're sitting at 49.20 or so as we're filming, back close to that $5,000 mark. I think that's very positive for the metal. Silver is the one, of course, that really went crazy, where we had that 30% drop or so. You can see it here on the chart, dropped all the way down, but look, same thing. This 20-day moving average showed an important point, but it came down, tested the support here at the 50-day, and then came back up to sitting now at around 83.75 as I'm talking right now. So the metals are clearly consolidating right now. We have an update today after the down day on Friday, the down day on Monday. So I don't think we're out of the woods yet. I think this is something we need to pay attention to. We need to see a couple of prints of the markets moving up before we can feel really secure about where we are as we sit right now with our metals. Let's take a quick look at platinum. You can see virtually the same thing, blew through the 10, very firmly tested the 50, and now it sits a little higher at 22.10. So that metal, I think, is also a little bit sketchy in terms of its position right now. And of course, when you think about the spread that exists with platinum, it makes me feel like maybe it's not such the right time to be investing in it. In copper, we also saw a drop, not quite as dramatic. So copper, of course, being so much more industrial, is maintaining its price still over $6 and up today almost 4%. I think it's a good metal. Again, you're dealing with bigger spreads, so you have to see real movement here before it makes a difference. Now, let's talk about what's going on with the gold to silver ratio, because I think this is something that we need to start paying attention to. As you can see, we've been following silver as the ratio has gone down. We've been levering more and more into silver, but you can see something kind of happened here. We started to cross where all of a sudden the index started going back up, sitting now at almost 58.5. But again, same thing. It tested the 50 and then kind of retreated back. So if somebody asked me today, should I be in gold or silver, I would still say silver probably represents the better opportunity today. However, it's getting very, very close. And of course, there's many other variables that are very important when you consider how you choose to allocate between the metals, such as your age, your risk tolerance, and a lot of things like that. The difference being when gold went down 10%, silver went down 30. That's the volatility. So we feel it on the downside, but we also feel it on the upside. All right, now one of the things that's really affecting this is that appointment of Wirsch as to the Federal Reserve. And you can see that had a positive impact on the dollar. The dollar came up, but look, they still remain below these averages. So the dollar, to my opinion, is still treading water and still under pressure. When we see the dollar start to come down, when we get down here around this 96 mark or so, if we blow through this point, now we're really sitting well with our metals. So there's a little movement we need to confirm to the downside of the dollar before we feel more secure in adding or increasing our metal positions, in my opinion. Now, let's talk now about oil. Now, we've talked about oil being a little bit of a counterplay to our precious metals. And as you can see, they did just that. The oil, U.S. oil went up to $63 a barrel. You can see it broke through not only the 10, but the 50 and the 200-day moving average. Now it's kind of testing it again. So it's not like it's shooting up or anything like that, but it is firming. So I know a lot of you have invested, in addition to precious metals, some of your money in a portfolio that includes oil, I actually think you're in a good position right now with that position, and I too am in the same thing. Now, let's talk about bonds, because this really speaks to a lot of what's happening. So we know there are a lot of kind of shenanigans. We saw JP Morgan closing a lot of shorts. It caused these deep kind of cascading stop losses getting hit that drove the market dramatically lower in silver. There was a lot going on in Asia and, of course, India. But what really is important to me are the base fundamentals. You know, the things like, are our bonds in like treasuries, is the yield going up, meaning the value going down? Is that sustaining? Do we think inflation is still on track? Do we think we're at a point where we're going to have to make some hard decisions with our budget deficit, right? We have basically three choices. One, we can raise taxes. We've tried that many times, kind of like what California is trying to do right now. And of course, all the billionaires are fleeing the state. I actually think you'll see a lot of people do that with America as well if it gets too crazy. The other option is just straight up default on the debt, which I don't think the U.S. can do. But we know our like Social Security and all these things are starting to become insolvent around 2032, 33. So there's going to be some hard choices to make. And guess what? The easy one is print money. And that remains very, very positive for our gold and silver positions. All right, so let's look at the bonds. So we can see right now the 10-year, the yield is up. That means there's less trust in the underlying value of the U.S. government's ability to pay back, just by a little bit, but it still is going up. And then the biggest creditor in the world, Japan, it also has had some big moves with its metal. Let me get this centered up for us here. And you can see it's sitting well above its 10, well above its 50, well above its 200, and kind of has this increasing slope. Now it's starting to level out a bit, so maybe they're starting to get a hold of it, but it still remains highly elevated from where it used to be. It used to be in Japan, it was basically zero or even a negative interest rate. So that's a major change. All right, let's shift a little bit quickly on the economic side. The M2 money supply, again, we know the government's continuing to print money. That hasn't changed. Now, if we talk about interest rates, you can see for the next period here, if we go out to about June or so, this is where we start to see we're going to have a new Federal Reserve chairman. We clearly know the President of the United States wants to drop rates. And so although the rates are sitting here at this 350, 375, you can see there's an increasing movement now to move it down. And even now, an extra quarter point beyond that and an extra quarter point beyond that. So that's a fundamental change. And that's recognition of the fact we are going to have a new Fed chair, and that we know our president is basically putting somebody in who he believes is going to assist the economy by dropping rates. Let's shift and talk quickly about unemployment. So you can see we're still sitting here. These are the December numbers. Every time we have these issues with the government saying they're going to shut down and all that, all of a sudden all the numbers get delayed. But ADP being an independent entity, I guess they're pretty due now to release their January numbers. I know that there's, I believe, coming out on Friday. Also recognize this week you've got earnings coming out for some big players like Google, NVIDIA, people like that. So the markets are going to move to these very big entities that are releasing earnings. So we'll need to keep our eye on that and see what happens. Now, let's talk about CVOL, right? So this volatility index we started to really zero in on is one of the tools to show us where the market's going. When these numbers go up, what it's telling us is that the CME, the Chicago Mercantile Exchange, is expecting an increase in volatility. When they see that, what do? They tend to increase margin rates. Those increases in margin rates tend to chase out the speculative trader, the tourist trader, the flyby trader, and we start to see pressure in the markets. That clearly happened on Thursday, Friday, and we can see it's increasing a little bit even now. We can see it up 7.5 here. For silver, and for gold up 2.5, so up to 40.77. That's something we have to pay attention to because those numbers are high. When silver sits above 100, that is clearly a cautionary tale. So although we're seeing movement to the upside today, it would not surprise me to see that retrace a little bit tomorrow. So let's keep an eye on that. Next, let's talk about margin rates. So we can see right now for gold, we're sitting at 37,625. That's higher than it was before, but the big one is silver. That got up to about 62,500 in the crazy times of Friday. It's still, though, highly elevated, sitting here at 59,000 for a 5,000 ounce bar. So they are starting to put the clamps on again. This hasn't changed. We're kind of playing the book over and over. What happened in the past, though, before this substantial drop was that the market just accepted it and continued to go up. The question to me is, have we already flushed out most of those highly speculative traders? Are we in a position now where it kind of doesn't matter what they do with interest rates as much, based on the fact that the other guys are already gone, the ones who bail whenever the markets start moving? That is something we're going to watch and pay attention to. Now, I want to spend a minute and talk about premiums as it relates to what's happening in Shanghai. I actually saw where there is a bullion dealer in Singapore that actually said they're going to stop focusing on the U.S. spot price and they're going to start focusing on the Shanghai spot price. So this is that power moving east, and in particular as we're talking about precious metals. Now, here's what's interesting. If we look right now at silver, I'm going to scroll down here a little bit, and you can see there's a substantial premium, right? We're at 84, they're at 100. People have commented that the price in Shanghai includes this 13% tax. Even if that's true, it's still elevated in Shanghai right now at a 16% premium. So, and versus Western spot, it's actually at a 19% premium. But here's what's really, really interesting. Let's look at gold. So when we look at gold right now, we can actually see we're at a point of a negative premium. Now, this doesn't happen very often. It's right now down 2.9% versus SMOT. If I scroll down a little bit, you can see right here, we had this blip that took place. If I look right here, you can see it used to be that there was this much higher premium in Shanghai, and now they flipped. Now the premium is actually higher in the West. That is very indicative of something. So the silver market and the gold market right now are operating very, very differently. Let's keep our focus on that. All right, let's talk about some general economics now. We can see our national debt's close to $38.7 trillion. We talked about those outcomes, the government, the three choices: raise taxes, default, debase, print dollars. It's pretty obvious what they're going to have to do, in my opinion. And we continue to see the debt to GDP ratio increasing, 124.32. See, the trade deficit is continuing to work down a little bit with China, which again, I'll say is very positive. But our paper to physical, both in silver and in gold, still remains very, very elevated. That creates a lot of torque in the market. Now, when we look at these big assets classes out there, so we're talking about things like public companies, precious metals, crypto, all the ETFs, everything. We see gold and silver are still number 1 and 2, and we still see gold is a $34.3 trillion asset. I mean, just look how much it dominates all the other assets in its class. I looked at this yesterday, and silver had actually fallen to number 3. So it's actually recovered now back to number 2, back above NVIDIA, largely because silver's up and NVIDIA's down. And that created that change. But you can see that's teeter-tottering a little bit because there has been a lot of pressure in silver. Okay, now, you've waited to the end. I want to show you some of the private models that I follow so we can kind of see where we are, get a general idea of what we should be doing. I'm going to show you a longer-term look, and then I'm going to show you a shorter-term look, and I'm going to do it for both gold and I'm going to do it for silver. All right, so let's start now and let's look at gold. So again, this is on a 4-day chart. We're not trying to trade. We're taking long positions. We're very comfortable with where we are. You can see gold right now up 5.44%. We can look at some of the numbers that have happened so far, and we can tell that this week we're down 1.48, but for the month, we're still up 14.35%. So gold's doing fine, even though we've had these retracements. I actually think that's healthy. And you can see by the model, it shows these substantial retracements, but we're still very much in the green. We've been long the metal since 2023 under this model, and it's performed very, very well for us. But now if I drill in a little bit, things change. So you can see right now, this is the pressure we're feeling in the very short term, right? So we can see here, if we look around January 26, we started to get some signals. If I scale back, you can see we were long way back here into the beginning of 26 on a shorter term model. So this is a 4-hour model. This is much shorter. And you can see though, this is what a lot of the scalpers and traders, when you see the metals moving rapidly, these are a lot of the things they're looking at. And you can see right now, it actually still continues to show gold in a downtrend. I believe that's going to flip, but that's something we need to pay attention to. Now let's move to silver. Silver again, since 2024 in its case, has had this rocket ship rise to the up. That hasn't changed. It still looks very, very strong. It's up 6% today at 84 and is very good. But again, let's go to the shorter term and you can see virtually the same thing. So when we look in here, we can see that we had a buy opportunity around the 9th of January, a little blip here with a sell, but then this is where we had the big sell-off and it remains in this sell period. So again, I wanted to do something with this channel that I know a lot of people don't. I, like you, I see people putting up these thumbnails on YouTube and they see things like $33,000 silver by tomorrow at 2 p.m. And we all know that's totally bogus, it's inaccurate. But what I want you to know is I'm going to show you what the models are actually showing, whether that's up or down. Now you might want to ask yourself, why would I be willing to do that as a precious metals dealer? And the reason is because I want you to feel secure in what you're doing with your money. It's your money. You're making your decisions. I'm not telling you what to buy or sell. I'm not your financial advisor. So I'm going to tell you straight out. Now, as a business at Summit Metals, we participate on both sides of the market. So I have no interest in not telling you something that's not completely accurate. And I hope you appreciate that. So that's kind of what's happening in the metals this week. And we've got a lot to watch. There's a lot of pressure in these markets. I've tried to illustrate that for you. I want to thank you for tuning in. Really appreciate. Please subscribe to the channel. I mean, we had a video last week with Roger from Bald Guy Money, over 100,000 views, but we're only sitting at about 35,000 subscribers. So many of you haven't subscribed yet. So please do. We're doing a lot of work on your behalf, and I do hope you appreciate it. Thanks for tuning in and happy stacking.